As we've seen for the last probably 18 months, it's been resources are back increasing their dividends. So strong rises by BHP, Rio, pretty much across the board. Most of the resource stocks, Fortescue is obviously the odd one out given low quality iron ores trading at a significant discount. But our numbers suggest about a 40% increase in dividends year on year for resource stocks. So that was a very strong theme because the overall average increase on our numbers, ASX 200, was about 11% increase year on year. So that's pretty strong overall, but clearly resources are the key. Other trends, so you saw lifts in payout ratios, people talking about that. In our industry, Magellan, big increase to 90% payout, about a 90% increase in dividends, so that was strong. On the other hand, and there aren't that many there, but a number of the stocks that are affected by the Royal Commission were more subdued. You had a token 1 cent increase in CBA, nothing from IAG, and nothing from IOOF, and you had a 30% fall from AMP. So a bit softer in the financials, but very strong in resources. Well, I mean, resources strong growth, but clearly it's a cyclical sector. But I mean, one of the things driving resources at the moment, we even saw it in the balance of payments numbers the other day, was there's strong demand for high quality Australian resources. And it's interesting that climate change is obviously a big thing globally, a big thing here, although the government isn't really addressing it directly. But one of the reasons why commodities are doing well is that the demand out of Asia, particularly China, for high quality iron ore, high quality coking coal, high quality thermal coal. Because if you still want to generate electricity, you still want to create steel, but you're trying to reduce emissions, how do you do it? Well, you use the best quality iron ore, the best quality metallurgical coal. If you've still got to produce electricity, you haven't got renewables enough to stop the power stations, but you're better off running high quality thermal coal from Australia and not use the more rubbishy and more polluting coal that tends to be the coal that's around in China. So I think that's a structural issue rather than a cyclical issue. A lot of it's just that Chinese want less pollution, and less pollution you need high quality inputs. Look, it's not forever because clearly renewables are growing and all that sort of stuff. But there's a transition period, and if you want to reduce emissions and pollution in the transition period, you've just got to use high quality feedstock. Yeah, certainly BHP, Rio, BHP, big increase in dividends, etc. And you can see that that's why Fortescue not doing as well, because their iron ore is less pure. And I know they've got some things at the moment trying to rectify that, trying to slightly increase their grades to get better, higher prices. But there's a massive discount now, probably the most there's been between high quality iron ore from BHP, Rio and Vale. They actually have probably even slightly higher quality versus your Fortescues and others. So that there's a big premium there for high quality, and I think that's here to stay. I think there's a good chance for BHP and Rio. They've got two of the largest franking account balances in Australia. BHP, something like $15 billion, and just happens they've also got good cash flow at the moment because not only have they got strong earnings on the iron ore, but they're selling their US oil shale business. So they have the ability to marry those together and pay it out, because clearly, if you don't have the cash, how can you pay the dividends? Unless I suppose you can. Some companies might be able to borrow, but for others they may not want to. So BHP, Rio are the obvious ones. I mean, maybe Harvey Norman, because they recently did an equity raise, which we weren't sure why they needed to do an equity raise. Who knows what might happen there.